Did you know that baseball spring training begins in just a little over a month? Even umpires are going to head back to work, and some might need some training of their own, as it's estimated that they missed more than 27,000 calls in the 2024 Major League Baseball season. John, mistakes are a critical thing and something that happens to all of us. But when you look at a new client's retirement portfolio, what kind of things do you find that they most often missed?
Yeah, I mean, one is on taxation. That's a big issue. We see a lot of people miss the way their accounts will get taxed. The other thing is the amount of risk that they're taking. A lot of people don't really realize that they're probably taking more risk than what they need to for the desired return that they're trying to get. So what we want to do is measure what is the standard deviation of their portfolio, so we can figure out a way to reduce that vulnerability in the event of dealing with volatile markets or even negative markets whenever they're withdrawing money from these investment accounts. The other thing is we got to look at lifespan of their portfolio. If you're taking too much, especially on down markets, it's a double whammy. And then from there, we also have to look at healthcare in retirement and extended care in retirement, the expense that you plan for and the expenses that you don't plan for. We want to make sure that we're earmarking assets to where you can reach all of your goals, ideally for, travel, and there's purchases and home improvement and spending time with your family. We want to make sure that money's there, it's spendable, it could be used, and you don't run out. So you don't want to create, any extra vulnerability if you don't have to, but having a good holistic plan that looks at all the different things regarding the remainder of your life, looking at estate planning, tax planning, tax efficient withdrawals, tax efficient investing, and like I said, healthcare and even extended care planning, and even looking at doing an insurance evaluation as well, and even figuring out when's appropriate to take Social Security. So looking at all these things as one is something that's crucial, and we want to make sure that you're making the right decisions.
If there was a glaring mistake or a problem in your financial plan, your retirement plan, when would you want to know? I dare say probably as soon as possible, so you can course correct. And so the best way to start is giving a call as soon as possible to John and the team at Matthew James Tax and Wealth Management. They can set up that complimentary second opinion, show you, if there are things that need to be changed, whether it is taxation, whether it is, a risk standpoint, how much you may be overextended as far as the market goes, or any other aspect when it comes to your retirement. Find out sooner rather than later, and then the appropriate steps you can do to course correct. Again, 337-366-8366 or online at MatthewJames.com. Speaking of risk in the market, well, I mean, the market has gone up so much, so fast recently that people like Jim Cramer from CNBC, they're concerned about greed and excess.
We ran a simple screen looking for U.S. listed stocks that are large enough to talk about on air, with total returns of more than 50% for the month of November. There were 66 darn stocks that fit that bill, which is an insane number. People are really making money, provided they are also taking something off the table.
Now, I think I know how this conversation is going to go, given the fact that we've been talking about how overvalued the market has been as of late. If someone is close to retirement, should they continue to ride the wave, or is now a great time to take some profits from the last 2 years? And if it is the latter, how do people go about doing that?
Yeah, look, ideally, we got to look at what's appropriate, what fits your actual financial plan, and that's the key thing. Now, we know the market is overpriced. I mean, we're seeing a Trump bump. There's a lot of benefits there, but we got to understand when's it appropriate to take some of your cards off the table. If you go to the casino and you walk in with $50 and you play, the machine or you put money down at the table, and let's say you win $1,000. I mean, I would rather pocket $1,000 and then go ahead and take that 50 and continue playing. If you lose the 50, it's one thing. But we got to look at what's appropriate with your plan, understanding the amount of risk of your overall total assets, and figure out, okay, what's appropriate for your age on the amount of risk that you should be taking, and when is the distributions are going to come out. And then from there, we have to look at the other thing too is, what kind of tax liability are you exposed to, and how can that be reduced? That's the key thing, is that we got to look for tax efficiency whenever you're taking money out of IRA accounts. We got to look at tax efficiency whenever your another source of income is social and a pension. And you might be realizing capital gains. You might have dividends. You might have interest. You might have tremendous amount of money at the bank paying interest. We have to look at how these incomes could create or could go through IRMA income thresholds, which could make your Medicare Part B and Part D premiums increase. So we got to look at all this as a whole instead of just like one thing and focus on a return. We got to look at the cost of different activity and how does it create taxation and higher health insurance premiums.
A lot of people always talk about the market when it comes to investment strategies, and it's true. You can't discount the growth potential of the market. It has been significant, and it's been very generous in the past, 14, going on 15 years. But here's the thing, is that as you get closer and closer to retirement, you need to look a little bit bigger picture, more from a 50,000-foot view. What is the potential, the tax ramifications of that? What is it going to do for Social Security taxation, IRMA, as you mentioned out there? What is the actual cost of it? And then, of course, if there is a market downturn, how is that going to affect your bottom line? It is all part of that comprehensive retirement strategy. And you may not necessarily know how you are spread from a risk standpoint right now. And that is something that John and the team, again, shining a light on that second opinion to show you, where potential pitfalls may be in your plan, and also how to go about, rectifying those things. Starts with a simple phone call, 337-366-8366. You can also go to the website at matthewjames.com. Recently read an article on Morningstar, John, that said retirees often misunderstand RMDs, or those required minimum distributions, where the government makes you take withdrawals from traditional pre-tax accounts so that they get their share. I was going to say their fair share, but we all know that's not necessarily true, but their share of the taxes. Too many think it's money that they're forced to spend. What's the truth on that, John? And should or could they even reinvest any of that RMD money?
Yeah, look, I mean, you're not forced to spend anything. Ideally, what you could do is reinvest that money, but that money can go into a Roth alternative account or a brokerage account, and that money can grow depending on the type of investments. Maybe you can use that money also to lower your tax liability, depending on your situation. I mean, what we want to focus on is, helping people get your money from your IRA to your Roth or Roth alternative, so you don't have to deal with RMDs at all. But even if you had an RMD, let's just say your RMD would be less than $20,000 or $30,000 a year, depending on how the tax code is going to change in the near-term future. You could potentially be pulling this money out to supplement your Social Security and not pay taxes at all. So, but that's only to a certain limitation, because we have to look at the bandwidth of the standard deduction, and if you're a single filer or if you're married filing jointly. So these are the things that we have to look at and we have to address. But instead of waiting until 73 and having to, or maybe 75 if you're born after 1960, to start taking your RMD, what about planning ahead? So instead of being forced to take money out that you don't need, and what we can do is take this money and send it over to a Roth or a Roth alternative to lower your RMD and lower your tax liability. So, I mean, the key thing, 2025, let's take advantage of Roth conversions. We know the Trump tax code is going to be extended, but then what if we can do something else? Well, if you're an accredited investor, one thing that we can do is set up an LLC and use some tax strategies on that LLC to help you move over $600,000 from your IRA to your Roth without paying taxes. Yes, that's exactly correct. So what we have to do is look at what is appropriate for you. But like I said, you have to be an accredited investor. But we can move over $600,000 a year without you paying taxes, or we can move less and offset pension income to where you're receiving a pension, you're taking money out your IRA, and you're doing a Roth conversion without paying taxes. But it's all about utilizing tax strategies that the wealthy use, that business owners use, and we can do that with using an LLC or a partnership to create a tax strategy, like I said, to convert or realize income without paying taxes.
I think a lot of people understand that, less money paid towards Uncle Sam, more money you get to keep for yourself. RMDs do mean, again, that R stands for required. You do have to take that money out. You are forced to. You don't necessarily have to spend it, but you do have to pay taxes on it. There are ways to mitigate what those RMDs will look like with a proper tax strategy in play. And believe it or not, the team at Matthew James Tax and Wealth Management, it's right there in the name. They've been helping people, here in Acadiana, here, throughout the country, honestly, minimize their tax obligations and get to keep as much of their hard-earned money as possible. It is, I would dare say, as important as a proper investment strategy. But Matthew James Tax and Wealth Management, they can help you with both of those. To get started, 337-366-8366. Set up a time to speak with them. 337-366-8366, or set up a time on the website as well. Find out more about John and the team and schedule your appointment right there, MatthewJames.com. This is the Retirement Room here on KPEL 96.5. What are the stupidest things Americans overspend on? Well, we're going to talk about that in just a moment.